Our future decisions will ensure that our policy rates will be set at sufficiently restrictive levels for as long as necessary. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The decisions taken today are set out in a press release that is available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the euro area economy is likely to have stagnated in the final quarter of 23. The incoming data continue to signal weakness in the near term. However, some forward-looking survey indicators point to a pickup in growth further ahead.
Yes, that's inflationary.
The labour market has remained robust. The unemployment rate at 6.4% in November has fallen back to its lowest level since the start of the euro, and more workers have entered the labour force.
That's it, spit that fire.
At the same time, demand for labour is slowing, with fewer vacancies being advertised.
That's deflationary.
Governments should continue to roll back energy-related support measures to avoid driving up medium-term inflation pressures. Fiscal and structural policies should be designed to make our economy more productive and competitive, as well as to gradually bring down high public debt ratios. Structural reforms and investments to enhance the euro area's supply capacity, which would be supported by the full implementation of the Next Generation EU programme, can help reduce price pressure in the medium term while supporting the green and digital transitions. Following the recent ECOFIN Council agreement on the reform of the EU's economic governance framework, the legislative process should be concluded swiftly so that the new rules can be implemented without delay. Moreover, it is imperative that progress towards capital markets union and the completion of banking union be accelerated.
Come on, Christine.
Turning now to inflation.
Yes.
Inflation rose to 2.9% in December, as some of the past fiscal measures to cushion the impact of high energy prices dropped out of the annual inflation rate, although the rebound was weaker than expected. Aside from this base effect, the overall trend of declining inflation continued. Food price inflation dropped to 6.1% in December. Inflation, excluding energy and food, also declined again to 3.4% due to a fall in goods inflation to 2.5%. Services inflation was stable at 4%.
Powell usually delivers a much
Inflation
better
is
speech.
expected to ease further over the course of this year as the effects of past energy shocks, supply bottlenecks, and the post-pandemic reopening of the economy fade.
Now she's
and
talking
tighter monetary
deflationary.
policy continues to weigh on demand. Almost all measures of underlying inflation declined further in December. The elevated
We need something from Ms. Lagarde about a hint at how long they're going to hold the interest rates. What is the plan, or what's the
started
outlook?
to ease. At the same time, lower unit profits have started to moderate the inflationary effect of rising unit labor
Not good
costs.
for gold.
Measures of shorter-term inflation expectations have come down markedly, while those of longer-term inflation expectations mostly stand around 2%. Looking now at the risk assessment. The risks to economic growth remain tilted to the downside. growth could be lower if the effects of monetary policy turn out stronger than expected. A weaker world economy or a further slowdown in global trade would also weigh on euro area growth. Russia's unjustified war against Ukraine and the tragic conflict in the Middle East are key sources of
directing the whole speech into a dovish narrative or a dovish outlook that slowly she's introducing the idea that the ECB is going to cut interest rates, which I don't know why she's doing because the Eurozone is not in a good shape. So I might have to close down this position as well.
The economy grows more strongly than expected. Upside risks to inflation include the heightened geopolitical tensions,
so far
especially in the Middle East, which could
daily
push
pivot
energy
is holding,
prices and
but
freight
unfortunately we have way too much room to the upside.
And hamper
and the weekly pivot is very close. It's like 50 or 100 pips away.
Inflation could also turn out higher
for this
than
reason,
anticipated if
I'm going to pull
wages
the plug
increase
now.
by
I'm closing
more
down the
than
position.
expected, or
booking in
profit
£177
margins
loss.
prove more resilient.
I'm waiting.
By contrast,
for
inflation may
another
surprise on the
entry
downside if monetary policy
higher
dampens
price.
demand
But
by
right
more
now,
than expected,
there is no
or if the
reason
economic
for me to
environment
hold position or enter into any sell just yet. Maybe when she's finishing the speech.
Moreover, inflation could decline
Who knows?
quickly in the near term.
So far, it's very
Energy
dovish speech.
prices evolve in line with the recent downward shift in market expectations of the future path for oil and gas prices.
Data was mixed. GDP inflationary, jobless
Looking at
claims
financial and monetary
deflationary.
conditions now. Market interest rates have moved broadly sideways
price is going
since our
down.
last meeting. Our restrictive monetary policy continues to transmit strongly into broader financing conditions. Lending rates
Who's
on
holding
business
sales and
loans
who's buying?
declined slightly
I'm holding.
to 5.2% in November,
Just a little bit a lot.
while mortgage rates
Yeah, I was
increased
observing.
further to 4%.
I'm more cautious.
High borrowing rates
Just a
with the
0.20.
associated cutbacks in investment
Still on
plans
that
and house
resistance zone.
purchases
It's
led to a
rejecting there.
further drop in credit demand
No.
in the fourth
I'm
quarter,
gonna wait.
as reported
gonna
in our
wait.
latest bank lending survey. While the tightening of credit standards for loans to firms and households moderated, they remained tight, with banks concerned about the risks faced by their
Definitely,
customers.
gold will continue lower.
Against this
But
background,
the question is daily
dynamics
pivot
have
strong
improved
enough to
somewhat,
hold? We have a bear
but
flag, which is
overall
excellent,
remain weak.
but we
Loans
don't have
to
any other
firms
catalyst for
stagnated in
tonight.
November, compared with a year earlier,
Oh, new home
after
sales
contracting
actually
in
at
October.
4 o'clock.
as the
You-
monthly flow of
Yeah, it could be
short-term
inflationary too.
loans rebounded.
No, sorry, we had new home sales already. No.
Loans to households grew at a subdued annual rate
Lagarde
of
is delivering 2
0.5%.
speeches today.
So to conclude, the Governing Council today decided to keep the 3 key ECB interest rates
Dollar
unchanged.
index is up.
We
Euro
are
USD is
determined to
sinking.
ensure that inflation returns to our 2% medium-term target in a timely manner. Based on our current assessment,
favouring
we
sales,
consider
but
that the
just
key
2% to
ECB
enter.
interest rates are at levels that, maintained for a sufficiently long duration, will make a substantial contribution to this goal. Our future
She's talking
decisions will
about-
ensure that our policy rates will be set at sufficiently restrictive levels for as long
Yes,
as
now she's
necessary.
talking hawkish,
We will
which is
continue
good.
to follow a
Good for sales.
data-dependent approach to determining the appropriate level and duration of restrictions. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. We're now ready to take your questions.
Thank you, President Lagarde. And the first question goes to Mark Schroers of Bloomberg. Mark, please.
Yes, thanks a lot for taking my questions. The first one is on interest rates. Last week in Davos, you said that you consider it likely that interest rates will be cut in summer, after some of your colleagues already had given similar guidance. Did you discuss the possible timing of an interest rate cut at today's meeting, also in light of the weak economic data we
Good
got from
question.
Germany this morning? And if not, if you didn't discuss it, Would you stand by your remark from Davos? Is it likely that we will get a cut in summer? And does that mean that, at least from your point of view, March and April are off the table? And the second one is on geopolitical risk and, in particular, the Red Sea shipping turmoil. You recently
First
mentioned
question,
possible
if
comeback
he says that they discussed rate cut, then I'm entering your cell again.
And your colleague Robert Holtman even warned that rate cuts in 2024 can't be taken for granted because of these risks. Given the most recent developments, the ongoing tensions in the region, has the Governing Council become even more concerned about it? And how would you react if risks materialize? For example, if inflation picks up again due to higher shipping costs or new supply chain disruptions? Thank you.
Well, thank you very much for your series of questions. Well, first of all, the consensus around the table of the Governing Council was that it was premature to discuss rate cuts.
All right, selling gold.
And in addition to that, I typically stand by my comments. So the comments I made to your television channel, Bloomberg, I certainly stand by them.
The reason why I sold gold because Ms. Lagarde mentioned that it's premature
I stand by what I have said, not what
to cut interest rate, which is good enough for me to sell.
Another thing which was very much the consensus around the table was that we had to continue to be data dependent. So rather than being fixated on any kind of particular calendar, which would be being date dependent, we reaffirmed our data dependency. And I have flagged in the course of the monetary policy statement some of the areas that we will be particularly attentive to in the course of the next few months. You specifically addressed the issue of the supply bottlenecks. I would be maybe a bit cautious about the use of supply bottlenecks because it was very much associated with the consequences of COVID and the multifaceted bottlenecks that we observed, both in shipping, in port handling, in dispatching of containers, which was really a very sizable disruption in the whole logistic chain. But we are observing very carefully because we are seeing what you are all observing, which is that shipping costs are increasing, delivery delays are increasing, and while we all know that there is more shipping capacity than there was in 2020 and 2021, we also know that costs and fees are increasing. Now, it does not, I think most observers agree to say that it has a moderate impact. The percentage of the water shipping freight is
Come on,
a little
Christy,
north
you
of
can do better than this.
1.5% of total cost transported. But we are being very careful and look attentively to the developments, and it's pretty clear, and I think whether you look at the IMF, the OECD, or other commentators, if the conflict in that region was to develop further, clearly that would be an additional risk, whether it's a question of the disruption of shipping that we alluded to, or the price of energy and commodities at large. Thank you.
Thank you. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much. President Lagarde, I have a question on, because you're always referring to wage data. So there's loads of wage data around. So what are you actually really looking at? And is there a cutoff point in the coming year? Because clearly we can look at wage data throughout the year. And then I would like to again bring you back to that.
We're not going anywhere, guys. We're not going anywhere with these kind of questions. You're right. The first question was very good about considering, or have they considered cutting interest rate, or was there any timing discussed? But right now, gold is struggling with the daily pivot. There are chances that it's going to break out and tap into the weekly pivot. And I see higher chances for that because we don't have enough craft from Miss Lagarde. So again, this position has to be closed down by me because we don't have enough. So booking 90 pips, 90 pounds. So losses are fairly minuscule, but unfortunately we don't have enough hawkish power from Miss Lagarde. That's what I was expecting. Anyway, how do you think about today's trading session? Bit messy, wasn't it?
Too many things.
Too many things.
Many
Data
manipulation.
was all over the place. But I was mostly disappointed in Miss Lagarde. Of course, she's doing her job. She has to be diplomatic. But usually, come on, she does so much better. So, next up is going to be the New York session, New York Open, and then there's going to be new home sales, and then another Lagarde speech. So for this one, you're gonna be guys. I have to leave you alone because I don't want to trade, too many hours a day. Any questions? How did you close the day? Profit, loss, break even?
No questions.
I grew my funded account a little bit and got a trade done by 0.25 in my real account. Just a little bit. It's 3 losses. It's kind of manipulation. Because he went up really quick after we sell it.
Yeah, there was a good. How many? It's 100 pip range.
Yeah, 100 pips. Like it was like 2 seconds whiplash for $10. So wants to try. You gonna be tomorrow for PCE?
Yeah, I will be around.
What stream?
Yeah, for you guys, definitely. If you want to.
I booked the profit
Of
bonus.
course you like.
If you want, of course you want.
Sure, yeah, we can do for the PC. PC is going to be much more sophisticated and easier to trade. Single data, print, no speech, nothing. Yeah, price is still struggling with the daily pivot. Damn.
I think that the price is gonna climb more up to 2025, and today's candle is gonna be green with the top wick, and tomorrow is gonna be shorts to the end of the week.
Yeah.
Can happen.
Yeah.
Yeah.
We'll see. But for now, Miss Lagarde didn't have enough firepower to bring down gold on his shoulders. Anyway, still from the morning, we had some very good profits. I think it was 50 pips from the morning buy, and then 20 or 30 pips from the sell in the afternoon. But right now, market is just testing the pivot. It's going up and down, so it's time to pull it out. Anyway, thank you so much, guys. It was an absolute
Thank
pleasure.
you, Thomas.
I hope you had a good day. You learned a lot.
Thank
To trade when the market is messy. Have a good night rest, and see you all tomorrow for a nice session at 2 p.m.
All right.
Ciao.
Thank you, Thomas.
Thomas.
Have a nice evening.
Bye-bye.
Thank you.
And those of you who'd like to join the Alpha community for juicy morning briefings, setups, trade alerts that when and what kind of assets I'm trading, you can go to alphafx.eu, read about me, go to purchase. I think there's only one membership left. Link in the YouTube chat or the description below. Hope to see you on the other side. Thank you so much, and good luck for PCE